Time for another stock review. This time we're talking JD.com. Can we make money from this Chinese business? Not to be confused with JD Sports. I often think of it like that sometimes, but yes, it's not JD Sports. This is JD.com. It's a Chinese company, and I've already, in preparing for this review, found some very odd practices. There are odd practices which I don't understand. It's why I don't invest in Chinese companies at all. Find them extremely confusing. Anyway, in this review, you're going to see the most honest review you're going to see on the internet, because I am unpaid to do this, unsponsored by the company. I'm here to present the facts, the solvency score, the profitability score, the balance sheet, the inside trading, who's buying, who's selling on the inside, the short positions. I'm going to share with you the website. Full disclosure, I'm not in the stock. I don't own the stock. I only own the S&P, so you know I'm completely impartial. Going to share you information about the business, the latest news around the stock. We're also going to look at a back test of the company and the dividend payout history as well. All of that's coming up, and we also have a Meet the CEO series. Perhaps you'd like the CEO on the show. We've interviewed lots of CEOs now, and many more to come. If you want your favorite CEO on the show, including JD.com, we have a series. What you do is email them at investor relations on their website, or create a page or a Reddit channel and tag this video and get a little bit of social media going and send it to them. Also, below in the video, in the description, you will find an invitation. It's called a Meet the CEO interview. It's your little press kit, if you like. You send that to them as well. I'll include that in the video down below in the description, so you can send that off to them. It's me talking to them on your behalf. So if you like them on the show, it does make a difference. We rank for nearly all our stocks that we cover now, #1 in many cases on YouTube. And if they're very small companies, we actually you can actually see a lot of interest build in the stock. Bigger companies, we still rank for them, but obviously, we don't influence the stocks. It's impossible. But you do see a lot of activity in the smaller ones, most certainly. Okay, without further ado then, let's get on to it. Want to see if we can make any money from this company today. We're going to look over the numbers. And if you like this review, please do tap the like button. Just like that. And we're making this during a live event, so anything could happen. Members can leave comments during the live show and subscribe. So if you do see that, we are in a live event right now. Click subscribe as well. All right, we're going to start off nice and simple, and then we're going to go into more detail. What is JD.com? So let's get straight into it. JD.com, 27.25. If we look at the line chart, you can see it's very volatile. It's up since its inception. Popped along, up, all the way up. It did very well. It seemed to explode during COVID. This is when COVID happened. Everybody went online in China. Kind of makes sense. And it's fallen away. Straight away, I don't like businesses with that history, because that says a macro condition drove this company and now it's back where it started. That tells me that this stock trends on macro conditions, and I mean, that's got some benefits, of course. You might want to trade on wars. A lot of millionaires and billionaires get created during wars, so you might regard that as an opportunity. But for me, that most certainly is not an opportunity. I don't invest in those sort of things. Okay, so JD.com. Let's go now and read the information on it. I'll just zoom in. Here we go. JD.com is a technology-driven e-commerce company. Think of it as like an Amazon in China. It engages in the... Oh, hello. Bill's just become a member. Oh, he's renewed his membership
has
there.
Become a member. Last day as a member, and by thanks for the memories.
Oh, there we go. Last day Bill's going to be a member. Thank you, Bill, for your support over the last couple of years. There you go. It engages in the sale of electronics products and general merchandise products, including audio, video products and books. It operates through the following segments: JD Retail, JD Logistics, and new businesses. The JD Retail segment offers online retail, online marketplace, and marketing services. The JD Logistics segment includes internal and external logistics businesses. The new the new business segment is composed of JD Property, Jing XI, overseas businesses, and technology initiatives. The company was founded on June 18th, 1998, just before COVID, really. And Huang Dong Lu, I think that's correct, and his headquarters in Beijing, China. The listed name is JD.com, all right, and 1998. Beijing, China, headquartered, employees 450,000. So it's a large company, does have a lot of employees. And Rang Zhu is the CEO. Love to invite Rang Zhu onto the show. I hope I've pronounced your name correctly. All right, let's move on down. If we were buying this on margin, despite what I say with it being a bit confusing, as it's a Chinese company, it has a 25% maintenance. So it's regarded low risk if you're buying it, or relatively low risk. Well, completely low risk. That's the lowest level you can get on margin, 25%. So that's good. Average volume, good volume here, 23.84, which means you can get in and out on the stock at the price you want. Today's volume has just started, 223,000. 2% yield, 2.19 dividend yield. However, we want to see how reliable that dividend is. Obviously, it's not been around a long time, so we don't have much history, but we'll have a look at it. Price to earnings ratio, 12.76. So obviously a lot less than, a lot more value, if you like, you look at it that way, than Amazon. Kind of makes sense, right? 52-week low, 2082, and 52-week high, 45.16. Okay, there we go. Let's move on down now. I don't see anything else. Oh, yes, we do. We've got the analysis report here from Morningstar. I don't use this. I do my own reviews, and I will cover my in-depth review in a moment when we get to the numbers. But this is what Morningstar say. Remember, they're paid to say this or influenced. I do my analysis completely for free. Okay, JD, the bulls say, JD.com adopts generative AI in its platform to help customers buy products that meet their specific demand better compared with its peers, leading to market share gain. That's what the bulls say. The bears, on the other hand, say JD.com expands into value-destroying domains in which it lacks competitive advantages, resulting in lackluster earnings growth. Okay, there we go. That's just a couple of days ago. In fact, March 7th, very recent information. If we look at their value, they say it's worth $46. Well, we'll come to what the fair value is shortly. I'll present that information to you. An economic moat, wide. Okay, that means it's got good margins. That's what it alludes to. We'll look at it as well. Uncertainty, high. And stewardship, exemplary. Looking good. Okay, here are our earnings. As you can see, we were coming up, steadily coming up, but on the last Q4 earnings, we have dropped off. And just during the making of this video, Sensei has said, first to 100 likes wins. What are we at? I don't know what we're at. I'll ask everyone in a minute. So please do tap the like button. Apparently, we're having a like competition between my channel, the main channel here, and the trading channel today. All right, fantastic. Let's see where we are. Let's see if we can beat Sensei today. All right, we recently beat on earnings despite the market being down today. I wonder why that might be. But it obviously didn't get great guidance. I think that's what it's all about. Didn't get great guidance. Well, we're going to cover all of that. And just look, Sensei's at 29 likes. I'm at 22. So he is beating me. There we go. No surprise. I'm doing boring reviews. He is doing exciting trading. Okay, moving on down during the making of this video. It is live, as I say. We've got people on the other channel, on the extra channel trading today. Okay, let's now move on to the website and take a look at the website, jd.com. What is it? A bit more detail for you. Let's have a closer look here. JD.com wins 2024 Gartner Power of the Profession Supply Chain. I don't get excited, I've got to be honest, about any awards at all. I think they're a complete waste of time, particularly we know the Chinese manipulation of everything like this. I've just been looking at the website. Their own news is not even on their website. They haven't got any news updated on their website since 2020, yet there is news out there. Really bizarre. Either lazy or just for some reason don't show it. I don't know. Never understand it. But awards like this, I think, are a waste of time. JD Power is paid by Chevrolet to say they're the greatest cars in the world. I don't see any point of it. Awards like that is self-adulation is pretty pointless. I don't see the point. To me, it always comes across negatively to me. Anyway, let's just read. Let's scroll down. There's not much on their homepage, but we can find more about the company, our business. Let's zoom in here. JD.com is also known as Jingdong. Has evolved from a pioneering e-commerce platform into a leading technology and service provider with supply chain at its core. Renowned for its supply chain innovation and excellence, the company has expanded into sectors including retail, technology, logistics, healthcare, and more, aiming to transform traditional business models with cutting-edge digital solutions. Okay, very, very nice indeed. JD Retail is leading retail and retail infrastructure provider committed for optimizing costs, maximizing efficiency, and expanding product offerings. Okay, that all's good. We're going to come back and look at the dividend history, and we're also going to look at the back test. But now we're going to go over to what's most important if you are an investor. It's, can you make money on this stock? Does it all add up? If it doesn't make any sense, why are we investing in it? All right, all the headlines is great, but can we make money on this stock? Well, let's go straight into the intrinsic value. That's the first thing we're going to look at. Tap the like button, please, if you like this video. I'm doing live reviews today. Sensei is on the other channel, trading. That's what today is all about. This is a review special day. Okay, valuation, undervalued by 62%. That's the valuation, undervalued by 62%. Seemed like a great buy then. Even undervalued at 71%. Worst case scenario, 45%. Looks good. Do we have any warnings? No, we don't. The intrinsic value is regarded as reliable. This looks like a good buy. So far, it's a tick. It's a buy so far. Undervalued by 62%. All right? Okay. If we scroll down, we can do a valuation back test in real time. I'll run it through the software and see what it produces. Here we go. The correlation of the back test is 37%. There you go. You might want to pause that and zoom into that if you want those dates and times there. You might just like to do that. Okay. Now then, Q4 earnings just reported, of course. Let's go in and find what we have here. In 2023, the company focused on user experience, scale, efficiency, and platform ecosystem strategy. Key indicators moved positively, with net revenues growing 4% year on year to RMB 1.1 trillion. Q4, now we need to remind ourselves. This might be in Chinese. No, this is US dollars. I'm just making sure. Yes, to RMB. So just making sure that we are in the right currency. So just bear that in mind, okay, when we're talking about a foreign company. Q4 saw actively customer growth, especially in JD Retail, and loyal user shopping frequently increased. New customer services improved. Net promoter score significantly. Electronics and home appliances gained market share despite industrial headwinds. The board approved a 2024 dividend of US dollars 1.2 billion and a US dollar 3 billion share repurchase. That's very, very good. Approving a dividend and a repurchasing is all good news. With the intrinsic value, it is certainly good news so far. No doubt about it. All right, let's move on down. Let's see how the company is growing. 1.1 trillion. Let me just check this a minute. There you go. 1.1 trillion is the latest revenue, and you can see it's steadily moving up. So valuation, we're looking at revenue now, and up 1% on the most recent range, 1.1 trillion. There you go. And if we move on to the operating income, 28.9 billion, that is up 6%. And we're seeing a bit of an S-curve building here. Very nice indeed. Net income is up 1%. Financing cash flow up 38%. Investing cash flow is down 314%. Investing is down. They're spending more money. Operating cash flow up 2%. Looking good so far overall. The intrinsic value looking good. The financials look good. Let's move on to the balance sheet. So far, this is looking good for the company. Okay, let's move on down to the balance sheet. 629 billion. 629 billion is assets, 397 billion is liabilities. Let's see how much cash we have. 190 billion is in cash. Very well funded business. 397 of assets. Short-term, long-term debt is 42 billion. So we are a very good balance sheet so far. Long-term debt is 10% of their business. This is a cash cow, folks. This is a good business. It's got 10%, 10% there in long-term debt, which it equates to 42 billion, but we have 190 billion in cash. So we can wipe out our debt. This is going to have a very high solvency score. This is going to look very, very nice indeed. So far, it's ticking all the boxes as a great investment. No doubt about it. Gross margin, 15%. Now, you need to compare that to Amazon, perhaps, and see what their margins are like. That's the moat, essentially, what we're talking about. So I'll give you a link for that in a minute, and you can go and check that on my software, and you can compare the two. Operating margins 3%, net margins 2%, and 5% FCF margin. Okay, free cash flow analysis. You might want to pause at some of these points. If you want to zoom in and take more detail, you can. Right, here we go. This is what we're interested in now. The profitability score, 48. I don't think it has such a high score as Amazon because their margins are greater, I think. But you can go and check that. 48% though is still very good. It's not green though. It's not a bright green Apple or Amazon stock position, but nevertheless, 48 is pretty good. We're green tick on free cash flow, positive gross profit. We're just amber on the 3-year revenue growth and the revenue growth forecast. The forecasts have been obviously dropped the stock a little bit, but I think it's a bit of an overreaction though, considering where we're going. I think so far, if you like Chinese stocks, it's a buy from me. Solvency score, well, it's 62. It's absolutely not going bust at all. It's very well funded. There's no issue with its debt position at all. Solvency is all good. All right. No surprise here. We do have an average forecast of 39% this year, which is very, very nice indeed, or even a high forecast within 12 months, 171. I do think it's overreacted selling off so much today. 24% downside though, but that's the 80. And remember, this is not in US dollars, so make sure you understand that. Okay. 80.8. All right. So we're not at $27 and it's going to go to 80. All right. It's going to go down 24% from where we are today. Just remember the currency conversions. Now, here are the links. I said to you about looking at the competition. You might want to go and do that. So I'll give you the link for my software and you can go and check out the competition. What about percentage of short interest? None applicable. No short interest here. We're not seeing any short interest at all showing up, which is very good news. What about the latest news? What's the latest news? The buybacks. That's very good news. Let's pick that up here from CNBC.
JD.com beating on earnings and also revenue estimates and announcing a new share buyback of up to $3 billion through the year 2027. It also raised its annual dividend to 76 cents per U.S. listed share. That's up from 62 a year ago. Now, investors liking the news, sending JD stock up 16% in U.S. trade overnight. We'll see how its Hong Kong shares do when the market there opens up at 9:30 sharp Hong Kong, Singapore time. So again, just to recap, it's ADRs at 24.91 last done. Hong Kong listed shares at 89.20 last done. Let's keep talking. JD and bring in Xiaolin Chen, head of international at Crane Shares. He joins us live all the way across in London, where it is closing in on midnight there. So Xiaolin, thank you for staying back so late to talk to us. We appreciate your time. First off, what did you make of JD's earnings?
It's definitely beat expectation in any ways you see, in terms of revenue, net income, EPS, in all aspects. When we look at this report, this announcement, what catch me the most attention from this report is their buyback. Now they announced another $3 billion of share buyback. Lasts across 36 months, about 3 years' time, up until 2027. Just sincerely shows the company showing a very healthy underlying momentum going on to support the business as one. Second, management of the company. Seriously think today the level is a very attractive level. They are putting a floor to their price, to their share price at this current level. And lastly, they now start to announcing dividends. Just follow the footstep like Alibaba. You start to see all these good companies start to accumulate a lot of cash over the years. Now they start to pay them back to create more value for the shareholder to hold who hold their stocks.
So, Xiaolin,
I think we'll leave that there. That's all good news, right? We've got the main points from there. If we now move down into the sentiment of the stock, you can see over the last 90 days, it was all positive, 64% positive, 71% of the last 30 days. Last 7 days dropped to 42%, and today it's all positive. Okay, plenty of positive news there, not too much negative news. Let's now look at this dividend we're talking about, because we need to know how reliable that dividend is. No point buying a stock if we don't have a reliable dividend. So let's first of all do a quick back test. If you like this video so far, please tap the like button. The invitation to the CEO is below in the description of the video. If you'd like to invite your favorite CEO onto the show. But let's look at the comparing to the S&P. You can see how it popped up during COVID. That for me is not a reason to buy it. That's the only reason not to buy it. That's the only negative. But on the other hand, you can say, well, you know, it presented this opportunity, it popped up, but the trouble is then it faded away. It lost momentum. Whereas the S&P kind of rippled through 2020, but carried on going very quickly and has continued to go. So if you compare the S&P, if you put $10,000 in the S&P, you've now got 3x, 29,000. If you put 10,000 in JD in 2015, you've now got 10,162. You've not grown at all, but you might regard that as an opportunity now because it's improving, adding dividends, and so on and so forth. Buybacks, maybe it's an opportunity now. But for me, it's certainly a macro condition, and it's faded away. So for me, that presents issues. Anyway, let's look at the dividend we're talking about. So it was 62 the last time it was paid out. It's going to be paid out now at 76. But remember, in 22, which that report didn't say, you like to sort of promote the stock, which is not what I do. I'm not paid by anyone to promote the stock. It was 126. So it went from 126 to 62 and now up to 76. So obviously it's only been going a short while. So it's not a dividend king. It can't be until it's been going a long time. Plus consistently increasing payout. Well, unfortunately, it's gone up slightly from where it was last time, but it's half of where it was the first time. So but I mean, it's very short history, but we, just have to, point that out. Whereas that presenter there was presenting how it's all great, dividends increasing. Well, yeah, but you're forgetting it actually halved from the first time. Anyway, let's give it now my final thoughts, whether you should buy, hold, or sell this stock. End of the day, it's your decision. I'm just giving you the information. So for me, I wouldn't buy Chinese stocks. I don't like the manipulation. I don't like the way the government influences the stocks. On their own website, they don't have the news, but yet the news is out there. They do have a good cash flow. They do have plenty of money. The debt position is good, but their margins doesn't compare Their margins doesn't compare to Amazon. I know it's a different business, but it's similar. The dividend is all very well and good. However, it's unreliable. I mean, we've only got three reports, but it's unreliable so far. It hasn't continued to gone up. We've halved since the first one. So it's if you like Chinese stocks, this is a potential buy for you. For me, it's not. But if you do like Chinese stocks and you do like this industry, it is a potential buy. So you know, if we go back to the year, you can see it's up 2% over the last 3 months. Over the year to date, it is down 2%, and we've just had a good earnings, a good beat. We've got cash, we've got money, we've got buybacks. But remember, the buybacks is until 2027. So again, if you know how Chinese companies work, 2027 buybacks. Oh, well, I mean, what happens? Do we start buying back in 27? Well, we're 24 now. We've got 3 years to wait. I don't know. Manipulation here. This is the name of the game for the Chinese stocks. We all know that. So it's a potential buy if you don't mind that manipulation. If you don't mind that Chinese angle, then fine. It's a potential buy. The dividend is not reliable. The cash is good. The margins are okay. Amazon is better than there are others. So that do better, but it's a potential buy if you like this type of stock and you're not concerned about it being a Chinese business. Click above my head for all the information and links and so on and so forth. Down below, you'll also find the link to the software that I use. Members can use my software for free, or you could have a premium plan with a discount, and basically makes my membership for free. Also look below as well if you want to invite the CEO onto the show, and they could share more information about the company with me as well. All right, so there are all the links that you need. Okay, over here you'll find my full review list. I've done over 110 reviews now for many companies, and more videos I think you'll find useful in the series. There's JD.com. Anyone can have a review. It's a member's perk. If you ask me to review the stock, I will do it for you. This one was for Jason Davis. Thank you, Jason. It'll be out later on YouTube, and I'll upload it to Rumble as well. Hopefully you will go and check it out. All right, that's it from me. As always, take care of yourselves and each other.